Account Tax Compliance Act, and it's the new piece of legislation passed by the United States of America on March the 18th, 2010.
FATCA is a piece of legislation that is designed to force foreign entities and foreign corporations that deal with U.S. persons to disclose those persons to the IRS.
Tax Compliance Act, otherwise known as FATCA, applies to every single financial institution located in every country in the world.
Responding by saying, not again. Here's another large-scale change program with no competitive advantage.
The response was that legislation of this size just wasn't going to work, and that either the legislation was going to be repealed or that there were going to be such broad-based carve-outs that it really wasn't going to apply to them.
You should really pay attention, because we think that many entities will be affected in the way they conduct their business by these new FATCA provisions.
Requires foreign financial institutions throughout the world to spend hundreds of millions of dollars to come into compliance with a statute aimed at enforcing U.S. law.
It is a completely new withholding regime, which will impact dramatically the financial world.
Should be focused on FATCA, because if they want to do business with the US in any way, then they need to be FATCA compliant.
The legislation is all about the disclosure of information that they have with respect to their US accounts.
FATCA requires the whole organisation to mobilise. It's going to require significant changes to the operating model around customer onboarding, withholding, reporting. This isn't a tax issue, this is a hugely complex change delivery programme.
The core components for the financial institutions will be to engage in a retrospective look back at their roster of accounts, to attempt to root out any accounts that may be beneficially owned by U.S. taxpayers. And then at the same time to implement a reporting mechanism on a prospective basis to ensure that anyone who comes into their bank who is an American is identified as such, and then to implement a program of automatic annual disclosure to the Internal Revenue Service of every single American's account, as well as the amount of money in those accounts and the amount of income earned in the accounts.
Very complex, cumbersome operational technology and compliance challenge. Now notice, I didn't talk about tax. It is a tax issue, but at the end of the day, the real impact is going to be downstream within the operations, technology, and compliance areas.
Well, my sense from taking the pulse of some financial institutions around the world is that they are struggling mightily to bring their systems into compliance with what FATCA will require.
Large global organizations have embedded issues. They have data quality issues. They've been trying to pull in information from clients for many years, or maybe they have legacy relationships that they haven't revisited within the clients for quite some time.
The IRS will withhold 30% of all U.S. source payments back to this financial institution. Wow. And this includes investment income, interest, dividends, capital gains. It includes the gross proceeds of any sale of assets, and it applies to the institution's entire portfolio.
To avoid such a non-compliance, the financial operators will need to enter into an agreement with the IRS, Internal Revenue Services of the United States of America.